Hello traders, today is Tuesday the 7th. We're going to scan the market on FX and stocks. Let me just open up the chart. Right, this is Euro dollar. It's currently pushing up. We've got a beautiful channel going downwards. It's making lower highs and lower lows. Let me just take these levels out. It's currently sitting on the 50 EMA. All right. Shortly, I'm expecting a phase 1 movement, which will be to the downside. Okay, down to these lows, which is around 380 pips. Okay, it's a massive move. The question is, when is it going to turn? Okay, that's the question. If you look at the indicators, they look quite bullish. There's no turning point or whatsoever, because the RSI indicator, this is going flat, and it's currently sitting at this level here, and it's just on the line itself. Let's put a level here. Let's see how powerful this level is. Go back in time now. Not much happening there. There is definitely interaction here on this level. Let's go back again. Right, now now that we know what's happening on the daily chart, we're gonna go down to the 4-hourly. This one here, that's the level that we have on the daily chart. This one here at the top. For now, it looks like sort of like struggling to break through this level to the upside. That's what is happening on the 4-hourly chart, and that was the known farms and FOMC and everything, all the news that we had last week. It's been going flat for 2 days really, and the range is very small, hasn't moved much at all. Just 60 pips today. Day before, it's been just ranging 100 pips range. And let's go to the 60-minute now. That's a signal that we have. I'm expecting some sort of rejection of this level here to the downside. Firstly, it has to take out these lows, then it has to pull back up a little bit, and then straight down to the bottom bit of the channel that we have on the daily chart. All right, make it a bit smaller, which will be this low, and as it breaks through this low, it's gonna head back down to this low down here. So basically, we have to wait until we have this reversal pattern formation happening on the 60-minute. Then it's gonna happen on the 4-hourly, and consequently, it's gonna happen on the daily chart, which probably we're just gonna get a high test bar of the 50 EMA. And if you're end of day traders, you can put an entry just below the low of the bar and the stop loss just above, and wait for it until it triggers. Once it's triggered, then as you have room to do so, you can move the stop loss to break even, and then just let it run. Let it run all the way down to these lows. First low here, 220 pips, and then this low down here, 300 pips. In terms of fundamentals, we all know that it's going to be pushing back down to the 119.5 level. That's what it said. That's what everyone is saying on the news and everything. And the lowest it's been is 120, the 120 level, and that was 2 years ago. Went down to 118.89. So that'd be the next stop. All right. So as it takes out this low, it's gonna head back down to this low, and then the 118.89. So it's here it is, this level here. So yeah, it's currently heading back down. It's definitely safer to trade with the trend and make sure it's making lower highs and lower lows, and just trade the stop loss. Make sure you don't reach more than 1%, and you can have different targets, as I said, this one here and then this one down here. Let's go to cable. Cable has been ranging for quite a while now. It's been ranging for a few months. There were some good opportunities up here, down to the downside, and it was giving a head and shoulders pattern as well on the 60-minute, which I'm going to show you guys in a minute. This is the range that we have. EMAs are pushing down slightly. When it reaches the top and bottom, it just reverses. Look at the stochastic, how it's matching up. Up here, reverses. Down here, price action reverses. Up here, price action reverses. Down here, we have a solid divergence. Lower lows in price action, high lows on the stochastic, reverses as well. A bit of noise down there. This one here reverses as well. That one down here reverses as well. And this one I've taken myself, reverse back down to these lows here. Alright, now it's pulling back up again. So when it reaches this level here, or even better this level up here, where the 200 EMA is, can start getting ready for short opportunities. Hopefully we're going to get a small little trigger bar. Small trigger bar, the smaller the better. It means that the stop loss is going to be tighter, but we have more chances to get stopped out. Okay? So these are the pros and cons that we have. Now we go down to the 4-hourly chart. And that's a head and shoulders pattern that I was telling you about. I took a shot here, right after this shoulder here. Yeah, that's one shoulder. The other shoulder, which is at the top of the range, bouncing off this level here. And this is the other shoulder, and as it takes the low out, that's the entry. Stop loss above the highs, let it run all the way down. You can just trade the stop loss. There were many news last week, alright? That was the non-farm payrolls, pre-announcement for the non-farms, FOMC, gold rates, and many others. It wasn't the best week to take it from head to toes, really. But I managed to bring it back down to this level down here. Yep, just before this announcement here. So, yeah, very pleased. It was 7-1 there, risking 1% of my account, end up having 7% up on my account. So I'm very glad for that. And this is the sort of trades that we have to be looking at. We have to be patient and wait for your 3-1, 5-1, 7-1. Alright? Doesn't matter if you get caught a few times in a row. Doesn't matter. Can get caught twice in a row, even 3 times in a row, as long as you get that one right. That 7-1 that is gonna wipe out all those losing trades, and you're gonna end up positive on your account. That's the key. Alright? So the key on trading is risk management, be patient, wait for your trade, and when it comes, then have a really tight entry and just go for it. Just get your entry there, just be confident. Once you're looking for your setup and you know the setup is there, you know you've been back testing it for quite a long time, and that's the one, that's yours. That's the one you have to take. Make sure you do it consistently every time, the same and the same, and again and again and again, because otherwise we're messing up the reward to risk ratio and some of the key points. Let me show you the head and shoulders on the 60-minute, which was even more clear. For end of day trading, don't go any lower than the 60-minute. Okay, this is the lowest you guys can go to, and that's the head and shoulders. One shoulder, the head, the other shoulder. All right, it's a reversal pattern, by the way. It's a reversal pattern. That was the top of the range on the daily chart. Yeah, that was the top of the range. Divergence here. Pretty solid divergence. Higher highs in price action, lower highs on the stochastic. First lower high after a reversal pattern. It's also an ABC pattern as well. Okay, ABC pattern. In terms of the head and shoulders, that was the entry there. Well, there are ways of entering this trade, to be honest. We've got the neckline here. He broke through the neckline there. This one I've taken it myself, as it broke through the neckline here, and took out these lows, which is what it has to do. And then as it pulls back up, that's the last chance to get in. Okay. Normally breaks through, pulls back up, gives you another chance to get in, jump on board, and then off it goes down south, down to the bottom bit of the chart there. Okay, the top of the channel and bottom of the channel. How many pips in between? 200 pips, and we're risking not even 80 pips. Okay, it's a pretty decent trade there. In fact, I've put in my stop loss there, but it's personal preference. Okay, I put my stop loss just above this shoulder here, because then it means that I can have a higher value per pip. Because the smaller the risk in terms of pips, the higher you can put your value per pip. So if you put an 80 pip stop loss, it means that you have to put your 1% on this number of pips here, on the 80 pips. So I mean, again, it's personal preference. You can put this, in reality the stop loss goes above the level, it goes here. But if you know that it's gonna go, you can put a tiny little stop, just 30 pips. So it means every 30 pips is gonna be 1%, and you just take it from there. All right. We have more chance to get stopped out, but if it goes, it's gonna be highly profitable. Right. Let's move on now. And actually, that's what it is now. It might come back up and give another opportunity here. Okay, to take it back down to the bottom bit of the range once again. Let's move on. Japanese yen. It's pushing up massively. I took it long last week. We have a touch there, a few touches there, so it's acting as a support. It's sort of like struggling to break through, cannot break through the floor. That's the floor of the house, and this is the ceiling of the house, yeah, the resistance. So if you cannot break through, then it has to go up. Alright. I was taking it long here. In fact, I put in an alert here to the upside and hit the target within 2 days. It was giving some really good opportunities. Look, low test, low test, low test, off it goes, yeah? And it's on the way now. Plus the stochastic was telling you that it was going to reverse. It was giving a oversold signal, so we need some buyers in the market. And there we go, buyers are kicking in. And at least it's going to go up to the 79 level, but long term it's going to go up to the 80, 81, 82 level, okay? Because Japan doesn't want the currency to be too strong, and they deal with loads of exports in Japan, okay? So if the currency is too strong, no one is going to buy it. So they actually want the currency to be cheap, so then they can sell the products, isn't it? So long term is going to be in this area here, okay? 80, 81, 82, 83. That's what they want the currency to be at, up here. Because remember, it's USD Japanese yen. So that's why I'm saying that if it goes up, Japanese yen devaluates. If it goes down, it gets stronger. Okay? If it goes down to this area here, then the Japanese banks and they're just going to intervene. Yeah, the BOJ, sorry, are going to intervene. Bank of Japan, trying to devalue the currency, which is what they've done here several times. And let's move on. Swissy. Swissy is exactly the same as Euro, but the other way around. It's USD Swissy, and it's currently sitting on the 50 MA there as well. And the reward to risk ratio is just unreal. It's giving 300. Oh, to this high is like 269 pips. Up to the top bit of the channel, it's like 300 and something, 367 pips. If it carries on within the channel, okay. And stochastic is massively oversold. We need some buyers in the market. The RSI is starting to hook slightly as well. Just wait until it hooks nicely. That means that he's already turning. By the time it hooks, we're gonna get a low test bar here. Okay, it's exactly the same as if you take Swiss long. It's like taking Euro short, really. It's exactly the same trade. Why? Because Euro Swiss goes flat. Look at Euro Swiss. It's just going flat. Okay, we get these crazy spikes every now and then, but overall, it just goes flat. Yeah, it's sitting at the 120 level there. This low is set up by the Swiss National Bank, the SNB, and it cannot go any lower than this level here. We get these spikes every now and then, but it's just sitting at this level here. All right. Let's go to the next one, Kiwi. Kiwi is going to be pushing down massively, I have to say. I'm getting ready for some good short opportunities. Let's make it a bit smaller. In fact, it's even given divergence as well. After this double bottom, it's been pushing up massively. Excuse me for a sec, let me just get this one here. It was given divergence here, broke through. Well, for those of you who took it there, came back down to the monthly pivot. That was a good first target. Alright, stop to break even, took some money there, and then shot back up. Broke this level here that we had. It even broke through this level here as well. After having a massive high test bar, the entry was just below, never got triggered, and it just carry on going to the upside. If it reaches this level here, then I'll be looking for short opportunities off the level, especially if you get a high test bar. Alright. Let's make it a bit smaller. Yeah, there's a pretty solid level there. I don't like to short it when it's like in the middle of nowhere, but actually there is another level there as well. So you put another level here. I mean, fundamentally, the currency is getting too strong as well. All right, so, and also it's overstretched from the EMAs as well. Let's see how many pips is overstretched. 220 pips overstretched from the 50 EMA. So at some point, sooner or later, it's going to be pulling back down. Okay, might go up to here and then pull back down, or it might just pull back down to here. Okay. For those of you who are trading with a trend, wait until it pulls back down and look for long opportunities of EMAs. But wait for your entry there. For those of you who are trading against the trend, which is more risky but much more profitable, and wait until you get a clear signal. In fact, this is giving you a clear signal, although there is no divergence there, and there's no divergence on the stochastic as well. But if it pushes down from there, this is gonna hook down, and we're gonna get a divergence there. See that? If you connect these points, you connect this point, which is that high there, and we just need to connect them there and there. If it does stem from there, that means that this is going to be a massive high test bar, and as it pulls back down from there, it's actually just going to be reversing back down to here and to where the 50 MAs are. Alright, so look for short opportunities there. In fact, you can wait for the high test bar to close, and then as the next bar takes the previous low out, that's your entry there. Okay, so I would say entry here, stop loss there. How many pips is that? It's only 40 pips, so it's a pretty tight stop loss actually. 56 pips. Let's go back and see the previous levels. We've got some levels here and there. Obviously, we're not going to put it above these spikes up here, because then we get a ridiculous reward to risk ratio. And it has to be just above these highs up here. Alright, just above all these highs here. So put a stop loss just there, entry just below, and then we can take it back down to the EMAs. and that means that every 56 pips, that'd be 1%. There, 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 there. 1, 2, 3, 4, 5 to 1. What is it? 1, 2, 3, 4, 4 to 1. There is the risk. That's the entry there. Stop loss here. Yeah, I'll put the stop loss here or there. It's around the 4 to 1, 5 to 1. Alright. Again, it's a dangerous trade to take. The confirmation that we have is that we're going to put the entry just below the low of the bar. And because we have a rejection of price here and a high test bar, and it's the first seller bar after 1, 2, 3 massive bullish bars. And if it does turn, and if it does take this low out, that means that we're going to have a divergence there as well. What we can do in this moment in time is to break it down in time frames. We go down to the 4 hourly. The 4 hourly looks quite bullish. Bear with me for a sec. Let me just go to the daily chart. Okay, this is the... Oh, you know what? I'm going to use these lines here, and I'm going to go to the 4 hourly chart here, so we know where the entry is. The entry is there. Alright? Right, it looks quite bullish. And the problem with Kiwi is that it's just breaking the highs out, and breaking the highs and the highs non-stop. That's why it's better to wait for a confirmation. If you're not too confident on taking the entry as it takes this low out, we can put the entry as it takes the weekly pivot out, which is a safer entry. But that means that the reward to risk ratio is going to be less exotic, but it's going to be better in terms of success rate. Okay, let's go back to the daily chart again. Let's make it bigger. I'm going to take this out. That was the entry. That's the entry there, below this low and below the weekly pivot as well. That means that the risk is going to be 82 pips. So every 82 pips, that'll be 1%. 82. 2 to 1 there. Alright. 2 to 1 back down to the 50 MA. The 50 MA is going to move as well. 2 to 1 there, not bad. Let's go to Canadian. Canadian is just pushing down. It's giving some really good entries for sniper short in this moment in time. We had like a few in a row actually. It has broken the parity level. The parity level is 1 equals 1, which is there. 10000. That's the parity level there. Remember, it's US dollar versus Canadian dollar. It's making lower highs and lower lows, trending beautifully, and it's just breaking all the lows non-stop. Yeah, we have quite a few bearish bars, one following the other. Let's see if there is any level there. Not much happening. Next level here and then down here. Right. Today we have so many snipers. It's pushing down. That is pushing down. For a sniper, the key is to synchronize the 60-minute to the 5-minute. Make sure you trade that phase 1. That phase 1 movement is what you have to trade on the 60-minute. That phase 1. Don't trade here. Trade on the phase 1 movement on the 60-minute, but on the 5-minute. Okay. Let's go to the 5-minute time frame. This is the phase 1 of the 60. That's a phase 2 of the 60. That's a phase 1. That's a phase 2. Yeah, phase 1. Phase 1 is always with a trend, regardless of the direction. That was a winning sniper there, and another sniper here, which still running. If the entry is there, 20 pips will be there. It's given in there to you. There it is, 20 pips. So it has to pull back. You have to pull back down 20 pips in order to be a winning trade. What we can do as it pulls back down to here, we can move the stop loss, which is here, 20 pips as well. And I quite like it because it's above this high. It's in a very good, safe place. So it's like the king, alright? Stop loss is the king holding the money here at the back, behind these warriors. And the stop loss, you can put a break even there. There it is, a break even, so we have nothing to lose. Just wait until it push back down a little bit, and once it's like here, it's like giving you a nice 14 pips. There it is, nice 14 pips target. Then move the stop loss to break even, let it run. Okay. Right. If you see that it's sitting here, it's struggling to break through, and it's only giving you like 14 pips, and it pushes back up to here, and it gives you 14 pips, and it pushes back up to here, and it gives you 14 pips. You know what? Take the money down there. Take the money here before it shoots up. Okay, because that might be the end of the phase on the 60 minute, which I wouldn't be surprised, because just look at the proportion of it. Phase 1, phase 2, phase 1, phase 2. These are small sub-cycles within the whole cycle, okay? That's one phase there. Phase 1, phase 2. Phase 1, phase 2, phase 1, phase 2. Phase 1, phase 2, okay? That'll be the phase 2, the oncoming phase 2. So, keep an eye on that, because the key for snipers is the agreement from the 60 to the 5 minutes. In reality, you're actually trading the 60 minute time frame. You're trading phase 1 on the 60 minute, but you're executing the trade on the 5 minutes. We go to Aussie. Aussie cycling upwards, making higher highs and higher lows, breaking through all the highs non-stop as well. I'll be very pleased if he shoots up to here, because then we can sell it. Okay? If he goes up to here, if he does that, and then he pulls back down and he gives the first lower high, then off we go. Alright? It's a very similar pattern to, it's an ABC button actually. Okay? Reaching the top, ABC. Okay? He's like the head and shoulders, but without the shoulders and the head really. So wait for the first lower high, and off we go from there. Okay? So basically, some people will take it here as it reaches the top, and on the real top, on the horizontal level, with a really tight stop. Some other people will wait for a confirmation, which is this confirmation here. What some other people do as well is to 50-50 the bar. So they take the trade halfway through the bar. So they measure the bar, and they take the trade halfway through the bar down south. Okay? And in fact, what you can do as well is to enter when it reaches the top, risk 0.6% of your account, and then enter again halfway through the bar. So basically you're waiting for a bit of a confirmation. So you have 1.2 risk on the table, and by the time to enter the second time, you move the first entry, the first stop loss to break even, and you're only going to have 0.6 risk on the table, but in reality you're having a 1.2 trade going south your way, yeah, in terms of profit. So it's highly profitable, and you just need to spot that turning point in the market. Really, once again, there we go. Touch, 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 all over the place. It reaches the top. First time it touches the level normally, it bounces off it big time. If you want to wait for a confirmation, wait until we get the first lower high, wait for a high test bar or something, and off we go. Alright. Also, you can break it down in time frames as well, as we know. And this is looking quite bullish still. It's looking very, it's looking very bullish. There we go. It's looking very bullish indeed. Okay. It's going to be pulling back down, but I'm really looking forward to see that it goes all the way up to here. Up to the high, okay? Up to this level up here, so that we can sell it. Cool. Next one, Euro Sterling. Euro Sterling gave a beautiful divergence here not too long ago. Massive divergence, lower lows in price action, high lows on the stochastic indicator, and then off it goes from there. Now it's giving a high test bar of the 50 MA. This is giving a really good entry as well down south. Continuation pattern. Okay. Let's take all these levels which are not useful anymore. Make sure you match up the same lows, okay? This low with this low, this low with this low, and then match them together. Let me just take this out, this out, this out, and this out. Right. For this trade to go, we want the euro to devaluate stronger than cable. Okay, in fact we want cable to be going up and the euro to be going down. That'd be even better. So now, what we're going to do, we're going to put the trend lines, beautiful trend line, spot on, and there. Now what I'm going to do, I'm going to take some of the EMAs out because it's a bit of a mess. This out, this out, this out, this out. Oh, that's better. Now we can put some Fibonacci levels. I'm going to get this. Swing high to swing low. Spot on the 25% of the move. Can we all see that? There we go. And guess what? The 25% is actually here as well. And let's go back in time and see. Well, not much happening there. But surprisingly enough, this low is very similar to this low. Let's make it bigger because I can't really see from here. Remove. I'm gonna put a level down here. Let's see what's happening here. Wow, quite surprising, isn't it? Touch, almost touch, bit of noise, but look at the rejection. Yeah, a massive rejection with some divergence as well. This is flat, this is pushing up, off it goes. Okay, go back again. Let's make it bigger. That's what we are. Making lower highs and lower lows, bouncing at the 50 MA. It's giving a high test bar. We've got a Fibonacci level there. It's offering a decent reward to risk ratio. Back down to this low is 182 pips. Stop loss is very tight. Very, very, very tight. Let's make it bigger again. There we go. And from here to here, let's say 55 pips, I would say. There we go. 55 pips. Every 55 pips is going to be 1%. Wait for the daily bar to close. It's going to close at midnight. By 11 p.m. we can start looking at opportunities in the market. That'll be 2 to 1. We're risking 1 to get 2, even 3 as well. Just about, yeah, it's a 3 to 1. 3 to 1 trade there. Once you reach your 1.5%, stop to break even, and so on, you can trade the stop loss after 2 consecutive seller bars or after 2 seller bars, and then just take it from there. All right. Euro yen. Euro yen on the daily chart. It doesn't look as good as euro sterling, I have to say. Okay, that was Forex. I'm gonna move on to stocks now. FTSE 350 is collapsing actually. This is the FTSE 350. Had a massive sell-off. It's gonna close in an hour from now. Let's see what's happening to the FTSE one. The banking sector actually. It's the banking sector. Yeah. FTSE 100 is still pushing up. FTSE 250 is pushing up. FTSE 350 pushing up. Banking sector pushed down massively. Let me just go to the banking sector. 1 second. Banks. Okay, Barclays. It's been pushing up today. Next one, Lloyd's. What a funny low test bar there. Lloyd's bouncing off the 200 EMA. RBS. What a seller bar there. Oh, wow, that was the one. Was it? Yeah, that was the one that caused this move on the actual sector. open here, spiked both ways, and it's halfway through. Okay, it gapped massively. You see this gap? Got a massive gap here of 200 pips from here down to there. Right. Obviously, that was fundamentally driven. Okay, I've got a few trades here. First one is CLLN-LON. Let's make it a bit smaller. Let's draw a trend line. Beautiful trend line there. There we go, making lower highs and lower lows, bouncing off the 50 EMA. Looks very similar to Euro Sterling, remember? And can take it back down to these lows quite easily. The risk is very small. There, 6 pips, not even. There. And the reward to risk ratio is quite exotic. Can easily be a 3-to-1 there. Okay. What else we've got? Yeah, it's one of them. The other side, nothing there. Stochastic. If the stochastic pushes down from there, this is going to generate a divergence. High highs in price action, lower highs on the stochastic, and back down to here. Okay. So the next one is a YULC-LON. This is not going to trigger in today. I prefer the other one than this one here, to be honest. Right, the entry would be there, stop loss there, and try the stop loss. Back down. Okay? If you want to focus on quality over quantity, the other one looks much better. The CLON-LON. This one here. Kylon place. Making lower highs and lower lows. Quite a clean cyclicity, bouncing off the 50 MA. Yeah, the risk on this trade is quite big. We better to do the same thing tonight as this bar closes here, or even the following day in the morning as well, and put the entry down there, stop loss down there, take it back down. Okay, got the levels there as well. Cool. The Agile was giving a really good entry. Let's go to all of them at the same time. Click on consistent list. Yeah, go. We've got all of them here. 350 stocks. Let's see. Right, cannot see now, but I've got it. There it is. Right. Okay. This is the Agile. It's making higher highs and higher lows. There we go. That's the channel that we have. There. And it's giving a good entry here. That's yesterday's bar. Entry just above the high of the bar. Stop loss just below the low of the bar. and just target these highs. I would target this high here, yeah. So the stop loss is like around 20 pips. Oops. Oops. So every 20 pips is going to be 1% of your account. One there. Risk 1. 2 to 1. That's 2 to 1 there, okay? That's an easy 2 to 1 there, which just got triggered today. And is sitting on the entry now, okay? So even tomorrow, you can even get the same entry as well. But have to see how it's reacting to this level here as well. And these should be hooking up as well in a minute, so then the price action goes up as well. Just taking from there. Alright, let's have a look at the FTSE 100 before we finish. And this is the FTSE 100. It's currently sitting on a solid level there. There we go, look what happened. Touch the level, back down massively. And that's what it is now. Got a few more touches here and there. And that's what it is now, okay? It's sitting there. So that I'll be more keen to look for short opportunities than long opportunities, because I'm expecting the FTSE to drop back down to the 50 EMA. Okay, so phase 1. Now phase 2 has to come as well. There we go, back down to there. Right, that's the power of horizontals. This acting as a resistance there, and it's overstretched from the 50 EMA as well. And the stochastic is up here. It's telling you that sooner or later we're gonna get some sellers in the market. And yeah, that's pretty much everything. Stay focused, be disciplined, don't risk more than 1%, wait for your setup to come, and yeah, on all the best. Alright? Okay, guys, take care, and I'll catch you soon.